Okay, good afternoon and welcome to this briefing on the Global Investors for Sustainable Development Alliance, which is launching today. And we have with us, to the far left, Ms. Leila Fourie, Chief Executive Officer and Johannesburg Stock Exchange and co-chair of the GISD Alliance, and also Mr. Oliver Bäte, I hope I'm pronouncing it right. Also a co-chair of the Alliance and chairman of the board of management at Allianz SE. And we have the UN chief economist, Mr. Elliott Harris, in the middle. Welcome, and they'll have some brief remarks, and then we'll open it up for questions. I'll leave the floor to you, Mr. Harris.
Thank you very much. Good morning to all of you here. On behalf of the Secretary General, Mr. Guterres, it's my pleasure to announce the launch of the Global Investors for Sustainable Development Alliance, together with the two co-chairs of this alliance, Mr. Oliver Bäte from the Allianz in Germany and Ms. Fourie from the Johannesburg Stock Exchange. The Global Investors for Sustainable Development Alliance is comprised of 30 heads of leading firms. These are financial institutions, but also non-financial corporations from around the world. The core focus of the alliance is to propose and develop concrete solutions for mobilizing long-term finance, long-term investment for sustainable development. Its aim is not only to mobilize this money, but to provide advocacy and to provide guidance on how the enabling conditions for this type of long-term investment can be improved, and to provide an example to others that others can follow on how these new investments can take place, can be organized, how financial instruments can be innovated and designed to facilitate the mobilization of this long-term finance, and also to find ways of channeling the resources to the sectors and the countries that need these resources the most. The Alliance represents each stage of the finance value chain. We have institutional investors, we have asset managers, we have universal and retail banks, but we also have corporations that operate in the real economy, if you will, and there are other stakeholders from the financial sector as well. Put together, the members of the Alliance collectively control some $16 trillion of assets. They operate in over 160 countries in 6 continents of the world, and they serve more than 700 million retail and corporate clients. So as you can see, these are very, very important people who lead very, very important enterprises. And they've come together, following the call of the Secretary General, to build this alliance to mobilize the financing that we need to make sustainable development a reality. We are deliberately reflecting in the composition of the alliance the fact that we have a supply of finance and a demand for finance that need to be matched, they need to be brought together, and that consequently the whole question, the issue of financing sustainable development is an entirely interconnected one that brings together a whole range of different stakeholders who have to make a contribution, each with their own comparative advantage, if we are to surmount this problem of financing the sustainable development agenda. The UN Department of Economic and Social Affairs will lead a support group from within the UN that provides the support and the organizational help to the Alliance as it conducts its work. This support group is composed of, as I said, UN DESA, UNCTAD, the UN Capital Development Fund, the UN Environment Programme's Finance Initiative, the UN Global Compact, and the Principles of Responsible Investment, as well as the World Bank Group. I'd like to pass the floor now to the two co-chairs of the Alliance, first Mr. Fourie from the Johannesburg Stock Exchange and then Mr. Bäte from the Allianz Versicherung, to get their views, for them to explain to you how they see the Alliance and the contributions that they will make and the reporting that they intend to do to the Secretary General about the progress under the Alliance's work programme. Ms. Fourie, first to you.
Thank you, Mr. Harris, and I thank the Secretary General for convening this alliance in such a timely manner. We know that a major shift towards long-term investing in development is essential to the Sustainable Development Goals. The JSE and other members are incredibly proud to be part of the GISD Alliance because we believe that everybody, from governments to businesses to private citizens need to be part of the solution that works towards meeting the challenge of a sustainable future for the rest of the world. Current estimates are that achieving the SDGs will cost trillions of dollars every year, mainly in the health, education, climate action, and of course infrastructure, including power and energy, telecommunications, transport, water and sanitation. Even though considerable finance will come from public sources, it's clear that private sector will have a role to play. We're committed to helping. Our aim is to adjust and to enhance the risk-return profile of sustainable development, including sectors and countries in which this need is most profound. Speaking from personal experience, the stock exchanges are already witnessing much greater interest in sustainable development incentives. In South Africa, in the JSE stock exchange, we alone have seen that our index in sustainable development top 30 companies has outperformed our general benchmark indices over the last 3 years. And so with the GISD, we will keep encouraging companies to improve disclosure and integrate sustainability into their business models. And I look very much forward to working closely with the other members of the Alliance, their strategic advisors, and the UN to ensure that the 2030 agenda is set up for success.
Thank you very much, Ms. Fourie. Let me pass the floor now to Mr. Oliver Bäte from the Allianz.
Thank you very much. Good morning. Thank you for coming and your interest in the topic. As we've heard today, the Secretary General has really made a big shift in the history of the United Nations by moving beyond governments and trying to mobilize private institutions and have them work together to make these things happen. So when we got the call, we were enthused to help. Now, the issue is very simple. Business can play a crucial role in fostering sustainable growth, not just growth. And the required capital to invest in health, education, transport changes, and energy can just simply not be shouldered by public sectors alone. Why? Despite interest rates being very low, the debt positions of many public households is such that they have very little wiggle room to shoulder the requirements that are coming upon us in order to implement the development goals. Now, to create scalable investment opportunities, particularly in developing countries, is very important to close such gaps. And they're not just a good thing to do, they're also a great economic opportunity, and they create value for our customers and our children. Now, many of the institutions that have joined the Alliance are already delivering on the SDGs. So, for example, in Allianz, we've done many things on the product side. What is therefore the difference that the Alliance is trying to make? The idea is very simple, not just to have the 30 institutions that have joined, but really leverage our networks that we have across industries, our own sectors, and bring other people in, make them join and commit to the same outcomes. Now, what is the true challenge? The true challenge at this stage is measurement. So how do you create transparency around the fact that not everybody is moving at the same speed and the same ambition to implementing the SDGs? So making sure in our team that we get to a proper measurement technology and create transparency on progress where it's happening and where it doesn't happen is of the utmost importance. And since we have only a 2-year mandate, we want to make sure that we focus on impact, not just words, as quickly as we can. And therefore, it was very important to have amongst the 30 companies many that have already worked on it for a number of years, so they know what they're doing and how do you get from words to impact. That's what I wanted to say upfront. I'm very happy to address any questions.
Thank you very much, Mr. Bäte. Just a few more words on my part to give you a sense of how the Alliance wishes to conduct its work over the course of its 2-year mandate. It's proposed to organize themselves into working groups to deal with individual groups of issues. One of the working groups may well be looking at the question of how one increases the supply of long-term capital, long-term investment for sustainable development. Another working group would consider questions of realizing the SDG investment opportunities in countries, especially in developing countries or countries where the flow of resources has been particularly disappointing. And third, as Mr. Bäte was talking about, we want to see, or the third working group would want to look at the question of how does one enhance the impact of investment, private investment, in sustainable development. And a part of that will, of course, be measuring that impact to see what works and what doesn't. Some of the issues will be addressed by looking in particular at what obstacles exist in individual countries or across markets, what obstacles prevent the scaling up of long-term finance, and what can the private sector do, what must the government do to remove some of these obstacles. Second question might be, how can one innovate in terms of financial instruments to come up with ways of mobilizing the resources that are more effective than the ways we have now? A major part of the work of the Alliance, though, will be outreach. We'll be speaking with others in their respective industries, in their respective segments, encouraging other players to join the effort and to move in the same direction, but also to speak with high-level policymakers and regulators in the individual economies to point out if and where there may be regulations or rules in place that prevent the scaling up of sustainable finance at the long term. And that might well include a reinterpretation of some of the standards or redefinition of some of the standards. It may include taking into account changes in the regulations that are in place. It may include changing the interpretation of fiduciary responsibilities to allow factors beyond simply the return on a financial investment to be taken into account by, in particular, the longer-term investments. And finally, reflections on mechanisms that could allow us, collectively, to price into our decisions the sustainability considerations that are becoming more important by the day. So with that, I'll stop and open the floor if you have any questions to either the co-chairs or to myself. I'll be happy to entertain them.
Yes, Mary.
Opportunity of investing in sustainability. Could you elaborate a little on what kind of investments do you see that can help both the SDGs and make money for investors? And two, one, a part of the SDGs is the fight against inequality. Considering that many people would see large corporations, and in particular the financial sector and the stock markets, as not helping that goal traditionally, what kind of measures do you think your own companies need to take? Thank you.
Start, if I may, with a couple of examples. When we take the 17 SDGs, and we're doing a number of them. So, for example, clean water and sanitation is a key problem for many, many countries. Infrastructure for that is needed. There's a lot of know-how. Often the capital is missing, but more importantly, the planning of projects and the execution is what's missing in the public domain. So we're not just bringing money often, but actually project management capability to the place. So doing good can be very good business. The other one is good health and well-being as we move to leverage digital technology to provide telehealth services. It is a very important movement from having physical doctors everywhere in proximity, but actually make medical services for diagnostics and other ways acceptable at longer distances. So we are, for example, investing a lot of telemedicine services in developing countries such as Indonesia and others. So there are many, many opportunities to do that. First question. Second question, in terms of what the financial sector says, there is there's rumors and there's realities. Actually, in well-run financial institutions, at least the ones I know, our employees are really making sure that we focus on the sustainability of our business models. That may be different in different countries, particularly for our home country, Germany, I can say that the least, that there's enormous pressure to do not just well, but also do good. Second, in terms of concretely, how do we service underprivileged groups? Allianz is one of the largest global provider of low-cost insurance access through either directly or through investments we've made like Bima that makes low-cost products available for underprivileged people everywhere in the developing world, from Bangladesh in the Middle East, in Africa. So there's many of us that do a lot. I think it's often just not on the radars of people.
Yes, and perhaps I can just add to that. I was just mentioning earlier, as an economist, I'm intrigued by the connection between financial services and the real economy. And there is a very tight connection. And I think that connection can be identified on three different levels: the area of business models, the area of customers, and the area of internal employees. And how does this connect to the economic opportunity that you were asking about? So insofar as business models go, we have seen, I'm the Group Chief Executive of the Johannesburg Stock Exchange, and what we have seen is that indices relating to SRI investments are starting to outperform those indices relating to general benchmark companies, which is signaling a zeitgeist. There is a change in the thinking of channeling and mobilization of capital. And this is driven by both policy and tax breaks potentially, but also by a general social consciousness that is starting to drive investor behavior in a way that we haven't seen in the past. In addition to that, items or investment vehicles such as green bonds give organizations a wonderful way to raise debt capital to fund, and particularly energy-related projects and initiatives. And we're seeing an enormous rise and in the interest of both issuing green bonds and, of course, investing. So I would predict that going forward, the pricing mechanisms associated with those investments are going to become distinct, and the those companies who portray or who request, who need financing in a more sustainable environment are likely to start to enjoy a much more favorable pricing relative to those who are building businesses in carbon emissions. In addition to that, from an economic perspective, a company's workforce is a critical enabler for success. And given the rise of the millennial group in the size and the ratio and the contribution that they're making to the workforce, the ability for companies to attract top skills means that they need to indicate a direction of travel that is congruent with the value system of the new and young generation who are up and coming. So capacity building within your organization and education around those initiatives is vital for attracting the right employees. Insofar as customers go, there is a rise, as we've seen in social media and the general press in the last couple of years, of the importance of sustainable development. And so we're seeing customers in shopping centers, customers purchasing cars, customers making investment decisions, are starting to shift their financing. And I think that we're going to see an exponential growth in the next 5 years as a result of that. So all of these things together are indicating that the direction of travel is certainly more favorable for sustainable companies than for non-sustainable companies.
And if I might just add one last thought to the question of inequality, as you pointed out, there is that perception indeed that the financial sector is pursuing its own aims, that it's investing in itself, that it's not a part of the real economy. And to the extent that we can generate the awareness, and that's part of the outreach and the advocacy that our Alliance members are going to be pursuing, to the extent that we can demonstrate that the private financial sector is putting resources, significant resources, into the transformation of our societies to make them more sustainable, this also generates new jobs. And these new jobs are going to be jobs that are inherently more decent, more sustainable, more attractive than the jobs that they are replacing. There is a challenge of generating enough jobs quickly enough to absorb all of the young people, for example, who are presently finding it difficult to get into the market. But the key point here is that the redirection of the investment flows towards the sustainable economy, towards green investments that generate good, solid, decent work, this is something that I think will be very well received by the public and changed the perception of the role of the financial sector in overall social development, as well as in dealing with the environmental problems that we've created for ourselves in the past. So this is one area as well where I think the Alliance members, through their outreach and through the work that they themselves are demonstrating, will be able to change perceptions and encourage a more supportive approach by many others in the financial industry.
Yes, and if I can add to that, equality and social development is a critical objective of our alliance. In the financial services world, and particularly in the world of the exchanges, one of the areas that we believe can unlock this is greater transparency, governance standards that mandate and require organizations to disclose gender, racial, previously disadvantaged groups is vital to transforming this environment. So, for example, gender pay parity mandates for listed companies. In my home country, South Africa, we have introduced a number of reporting requirements which are mandated for listed companies. We have requirements that boards need shareholder support for the remuneration policy. We have requirements that boards disclose their racial and gender ratios at a board level, and we're engaging at this point to take that down a level to the executive. And so all of these standardization and a common agreement of quantification on a global level, for example, through all these stock exchanges, through the listings and disclosure requirements, I think is vital in order to encourage more rapid transformation and reduce inequality.
Yes.
Hi, I'm Karine Naughton from Le Monde and Radio France Internationale. Concretely, how the Alliance is going to work? Because you're 30 big corporations, we know you all have your agendas. So how concretely are you going to work? And second question, to follow up on that, because you were talking about water and sanitization, how can you ensure and how can the UN ensure the Alliance is doing it ethically and not favorizing some of your customers, for example, big corporations?
As we've just heard from Elliott before, we have organized in 3 work streams that have 2 co-heads. For example, we are involved in number 2. So we have very practical work streams that we are going through to say, for example, how do we measure the attainment of the 17 development goals? What are the KPIs? How do we create transparency? How do we work with chartered public accountants that the transparency rules that we all have are sort of measurable? So we have very practical things that we do along these 3 work streams. That's question number 1. Question number 2, it's a good question. I don't know the answer yet. But for what we're doing on the investment side, to give you a practical example, and we've discussed this earlier with the Secretary General, when you think what the real obstacles often are from the investor side, it's less asset managers, because asset managers get a mandate from the so-called asset owners. That's pension funds behind them, that is insurance companies like us. So we have really the obligation to determine the asset allocation, make sure that's proper. How do we make sure that there are reporting standards that these asset owners are actually giving the right mandates to the various asset management firms they give to? Because the asset managers can't do it. Secondly, and almost as important, there's a group of people that have no excuse, and that are the sovereign wealth funds, or those funds that actually are funded by public money. So attention should be really focused on, are the governments, whether that is on climate or gender equality or in clean water, are they actually putting the public money that they are supposedly running into compliance with the 17 SDGs? And the answer is not yet. So we have lots of nice things to do in order to move. I think the power, personally, my personal opinion, the power will come out of the transparency and the convening power that the UN really has, because it's not suspicious to run big corporate agendas. Right? And I think that's a real powerful, and it actually makes a formal connection between the public and the private sector work, which we tried with the World Economic Forum, and that it didn't really have enough impact in the past.
And I think perhaps just to build on this importance of the convening power of the UN, The reality is that while the members of the Alliance are important actors in enabling the three objectives that were just highlighted, we will be building on many existing relationships, many existing initiatives. And the idea of the GISD 30 Alliance is that we will use multilateral relationships through lobbying and advocating with government, with policymakers, with civil society, in order to use our convening powers and to influence, educate, advocate, and highlight the importance of this. So it's as much about channeling finance as it is about using influence and convening powers. 30 very large, very prominent organizations across the world will not be doing this alone. We will be partnering with our countries, with our industries, and we'll be channeling our efforts to those industries and to those countries where we see the greatest need.
Perhaps I can add one last element to this. Your question was, how do we know that they're actually making a change and moving towards true sustainability? The Alliance does not intend to just produce a report at the end of their mandate and tell the Secretary-General, here it is. But over the course of the work that they're doing, they're going to be building up indicators that will measure the progress along the way. So, for example, the working group that's going to be looking at increasing the supply of long-term investment for sustainable development will set out performance metrics that will measure the change in this supply, and they will report at intermittent intervals on how well they have been able to meet those metrics or to carry those metrics past or beyond a given benchmark. A lot of that work on metrics will be done together with the World Benchmarking Alliance as well, as they seek to set up, establish industry-wide benchmarks and standards that can measure your performance against SDG-related indicators. Now, I'll have to say here, it's unreasonable to expect each and every member of the Alliance to hold itself accountable for each and every one of the targets in each and every one of the Sustainable Development Goals. That would be unrealistic. Some of those goals are not particularly relevant to the field of activity of an individual Alliance member. But in those areas where they are active, there will be performance metrics established, and then they will voluntarily report against those metrics to the Secretary-General, into the global community, if you will, and in essence, they will be holding themselves accountable for the commitments that they have made for change in their business practices. And so we think that this is an innovative approach. It's not something that governments do particularly well, I would like to point out. And we hope that through this example that they give, you'll find more and more firms from the financial industry, but also from the private business community, emulating that good example and following this example of this way of doing business in a different way. Thanks.
Okay. Any other questions? Thank you very much.
Thank you.
Thank you.
Thank you all.